Well, good morning, everyone, and welcome to the M+A Partners webinar in this, our centenary year. My name is David Talbot. You should see my picture on the left-hand side of the screen. I'm a chartered accountant and I head up the Business Services Department, having worked for M+A for over 20 years. Just before we get going on the presentation, just give some quick guidance as to how to navigate the webinar platform. At the top of your screen, you should see a speech bubble icon, and this will let you send us a message or raise a question. And my colleague Ryan Nesbitt is sitting beside me, and he'll be monitoring any messages and questions. We'll try to deal with them either as we go through. There will be a break about partway through. We'll just pause and look if any questions at that time. We're expecting the webinar to last anything between 30 minutes to 45 minutes. We will have another opportunity for questions at the end of the session. Don't worry, if we haven't got time to deal with all the questions or your particular one, we'll be able to pick up on those by email afterwards. Also, if you have any internet problems, don't panic there either, because we'll be sending everyone a link to a full recording of the session later. And that will also include feedback on the presentation content and ideas for future webinars. So I'm joined today by Steve Dack, whose picture you see on the right-hand side of the screen, who's a chartered tax advisor, senior manager in our tax department, who's also been with M+A for around 20 years. I'm delighted and relieved that Steve has a wealth of tax experience and is going to be presenting the main part of today's webinar. So today we're talking about the subject of making tax digital, which is a particularly hot topic at the moment in the tax world. Later in our centenary year, we'll bring further webinars which will look at specific aspects of the digital world, including cloud accounting, and we'll be led a little bit by your feedback as to the content of the future webinars. Okay, so I'll hand over now to Steve, who'll talk you through some of the detail on this subject.
David, okay, so what are we going to be covering today? Well, first of all, we'd have a look at the background to making tax digital, basically looking at what HMRC are trying to achieve. And we look at the four foundations of making tax digital, and how HMRC are framing all this. Look at the timeline for the implementation, who is affected by making tax digital, the concept of digital record keeping and quarterly reporting, the suggestions made by HMRC to simplify the tax system, which is really aimed to make quarterly reporting and digital record keeping easier. And then David will talk through with you some of the digital tools and apps available, together with some case studies. Okay, so what is the background to making tax digital and what are HMRC aiming to achieve? Well, I thought we'd start with a couple of quotes. The first one from George Osborne, the then Chancellor, back in March 2015. In his budget speech that year, he said, "We will abolish the annual tax return altogether. Millions of people will have the information the revenue needs automatically uploaded into new digital tax accounts." And then later in the year, in December 2015, HMRC stated, "By 2020, most businesses, self-employed people and landlords will be required to keep track of their tax affairs digitally and update HMRC at least quarterly via their digital account." That then led to some consultations in August 2016, in which professional bodies, accountancy firms and various other parties were invited to respond. And there were 6 consultations, and these probably give you a flavour of the issues involved and the scope of the proposed changes. They were bringing business tax into the digital age, simplifying tax for unincorporated businesses, simplified cash basis for unincorporated property businesses, voluntary pay-as-you-go, administration, and transforming the tax system through better use of information. We'll not be able to cover everything today, so our main focus will be on the first of these, bringing business tax into the digital age. HMRC published their reply to the consultation responses on the 31st of January, and some of the legislation has already been drafted. Making tax digital has also been looked at by the House of Commons Treasury Committee, which has made a number of observations, criticisms, and recommendations. It's now currently with the House of Lords Economic Affairs Committee, and I believe today they are interviewing representatives from HMRC about this. So as you can see, not all of the details have been ironed out yet, and indeed the consultation in respect of how making tax digital affects companies has yet to commence. So it's very much a case of watch this space. As mentioned before, there's 4 foundations or aspects to making tax digital. First is the digital tax account. This will be your main interface with HMRC. All tax information interaction be in one place. There'll be no, for instance, separate notification of change of address or other details. You just basically tell HMRC once and they'll update the various departments within HMRC. It'll be easier to make payments online and also enter into time to pay arrangements and other options. And you'll have the ability to appoint an agent for the services you choose. We also got the second idea from HMRC, or the second foundation, is the idea of simplifying the tax process with the pre-population of information. Currently, a lot of the entries you include on your tax return is simply providing HMRC with details they already have, either from their own records or from third parties. Instead of this, your tax account will be populated with this information. So, for instance, your employment or pension income, your state pension, bank and building society interest, and later on child benefit receipts, which is relevant for those whose incomes exceed £50,000. And in the future, HMRC believes there will be potential for other third-party information to be fed into your tax account. And for your processes, it'll simply be a case of confirming that the details are correct. If they aren't correct, you'll either have to contact HMRC to get it corrected, or probably more problematic will be contacting the third parties, such as the bank, to get them to submit the correct information. Actually, some of you who prepare your tax returns using HMRC software may already have seen some of this in action, with employment income already appearing when you come to prepare your tax return. The third foundation of making tax digital is the idea of having all heads of tax in one place. So, for example, a sole trader will be able to see details relating to his or her own income and national insurance liabilities and payments, their VAT affairs, and the PAYE liabilities and payments in respect of their staff payroll. Again, this is something that has already started. Some of you may have seen this when you log into your digital accounts beginning to come into place. And another aspect of this is that you'll be able to set overpayments under one head of tax against the liabilities under another heading. So, for instance, if you've got a VAT refund due to you, you can set that against your PAYE liabilities instead of just sending a check in or sending a payment in with one hand and receiving money back with the other. And the fourth foundation is digital record keeping and quarterly reporting. And this is what we'll be focusing on in more detail today. In terms of timeline, there's actually a pilot starting in April 2017 with around 300 taxpayers. HMRC intending to expand this as time goes on. But for most people, it will look like this. In April 2018, it will begin for unincorporated businesses and landlords. For sole traders and partnerships, it will apply to the first accounting period commencing after the 6th of April 2018. Therefore, if your business has an accounting period ending on the 30th of April, then making tax digital will start on the 1st of May 2018. Under the current draft legislation, this will mean that businesses with a 31st of March year end, for instance, will not start within making tax digital until the 1st of April 2019. Therefore, you get a delay of nearly a year. This is how it currently stands in the draft legislation, but for other tax purposes, 31st of March is treated as being coterminous or the same as the 5th of April, so HMRC may have thoughts about that and change that. In April 2019, Making Tax Digital will apply to VAT. And then in April 2020, companies and larger partnerships with a turnover of £10 million or more will begin Making Tax Digital. Right, who's going to be affected? Well, it might be easier to say who is not affected. A few exemptions have been confirmed, along with others to be finalised. First of these is charities and community amateur sports clubs, or CASCs. They will be exempt from Making Tax Digital, but not their trading subsidiaries. So if a charity has a trading company which donates its profits to the charity, even though you might think the whole thing is a charitable enterprise, that company will need to comply with Making Tax Digital. Insolvent businesses are currently exempt, but HMRC are liaising with insolvency practitioners with the idea of bringing insolvent businesses into the regime at a later date. We also have an exemption potentially for businesses unable to engage digitally. The definition of this is following the current exemptions for VAT online filing, and they are a person who is a practicing member of a religious society or order whose beliefs are incompatible with the use of electronic communications. I don't think that would apply to many people, but an example would be members of the Plymouth Brethren. And secondly, persons for whom it is not reasonably practicable for reasons of disability, age, remoteness of location, or any other reason. Now that seems quite a broad definition. I can guarantee that it'll be applied narrowly by HMRC. I actually attended an event last year with other agents held by HMRC, during which that definition was discussed, mainly with reference to the lack of broadband speed and mobile phone coverage in several areas of Norfolk. I have to say, it didn't actually make much of an impression of HMRC, so I don't think we'll get much mileage out of that. Their main argument being that you can always appoint someone else to do it all for you. Finally, there is a possible exemption for very small businesses based on their turnover. HMRC did originally suggest a £10,000 turnover cut-off. This is widely questioned and criticised during the consultation period as being a rather arbitrary figure. For instance, it doesn't even equal the personal allowance. So HMRC are actually giving this further thought. And there's also not an exemption, but a deferral possibly for the next tranche of businesses with turnovers above the exemption threshold, but below a second threshold. The idea being is that they will be given more time to comply with Making Tax Digital. However, the period of delay hasn't been confirmed, neither has the turnover threshold. So again, we don't know the details of this. A lot of people have suggested that it should be the current VAT registration threshold of £83,000. Well, indeed, some have actually said this could actually be the exemption threshold as well, which should leave a lot of people out of the regime. So we're on to digital record keeping now, which is really sort of getting on the meat of the subject. Businesses and landlords will be required to keep digital records. This does not mean that all invoices and receipts need to be stored electronically, although there are a number of software solutions and apps that do include the ability to photograph or scan receipts in order to capture the relevant data, and we'll see examples of that later. Actions are to be analysed in accordance with current self-assessment categories. I haven't set these out on a slide, but if you refer to your 2016 tax returns, you'll see that expenditure is grouped under certain categories. They differ between self-employed and landlords, but the idea is that you have to keep all your records analysed in those categories. You will require software or an app to be able to do Making Tax Digital. HMRC are not providing any software themselves, but all they are doing is upgrading their own systems and developing APIs or application programming interfaces so that software and apps will be able to talk to their systems. Therefore, we are relying on third-party developers. Currently, many people make use of HMRC's free software for submitting their tax returns, and they're also insisting now that a version of software developed by third parties will need to be made available to smaller businesses, although it will still need to meet the minimum requirements for making tax digital. Again, these criteria are still being ironed out. Both the free software and paid for software will include prompts or nudges to provide support to users when entering data and submitting the quarterly updates. The idea of these is that they will identify common errors and highlight instances where data just looks plain wrong. Again, it'll be a learning process, both in terms of the software and users. HMRC originally said in their consultation documents that the use of spreadsheets would not be permissible or count as digital record keeping. They've since relented on that and said that people can keep records on spreadsheets, as many people already do, but you'll still need making tax digital compliance software in order to cleanse the data and make the necessary submissions to HMRC. Okay, and then the next part of after you've been keeping your records digitally will be submitting quarterly reports to HMRC. This will be a summary of the transactions for each quarter, not necessarily details of every single transaction. You'll have 1 month to submit that after the end of the quarter. Though, should you wish, you can submit more frequent updates, say on a monthly basis. It's also not necessary to include the usual accounting adjustments such as stock or accruals. So it will simply be just the figures you include as you're going along, and will not necessarily mean you have to undertake full stock takes every year. Three-line reporting is currently available for small businesses under self-assessment, and this basically shows total income, total expenditure, and profit. And this will continue for the quarterly reports where turnover is below the VAT threshold. The idea that HMRC are pushing is that as you submit each quarter, you'll get an estimated tax calculation as you go along. And the idea of this is that it will allow businesses and landlords to plan their tax liabilities and not receive a nasty shock at the end of the year. Okay, before we go on to the next slide, are there any questions? Okay, let's see. We've got one. How do partners and partnerships keep records and submit reports? Well, at the moment, there's only one partnership return submitted, and one partner signs that on behalf of the other partners. It'll be very much the same sort of process under making tax digital, in that one partner will be nominated to keep the records and submit the reports. It also will show the allocation of profit between the different partners, and the idea is that this will then filter through to each individual partner's digital tax accounts, and the tax calculated accordingly. Are there any other questions? Will I still need to complete a tax return? No, not as such. Basically, making tax digital removes the need for tax returns, is the idea. Although, as you'll probably see, you need to do something. You need to engage with HMRC still and provide details which aren't covered by the making tax digital. So, say for instance, if you receive dividends or other sorts of income. Okay, then there's a couple of questions there. We'll have some more later, no doubt. Okay, we'll move on to finalisation. So once you've submitted 4 quarterly reports, it will be necessary to finalise the details and include any adjustments and corrections. So, for instance, finalise your accounting details, include the stock take, for instance, accruals, prepayments, and such like. And the deadline for doing this is 10 months from the end of your accounting period. HMRC originally suggested a 9-month period in which to do this, but have sort of following the consultation increased it to 10 months. So what does this mean in practice? I'll give you some examples based on different accounting periods. If you have a 30th of April year end, then you're looking to submit the final declaration at the end of the following February. either have a 30th of September year end, the deadline will be the 31st July, a 31st December year end, you're looking at a 31st of October final submission. And if you have the very common 31st of March year end, then you're looking at a finalisation deadline of the 31st of January. So in this case, it's essentially the same deadline as is currently the case on the self-assessment. So you can see, actually, unless you have a 31st of March or 5th of April accounting period, finalising your details, submitting those final account details to HMRC will have to take place earlier than is currently the case. And in some cases, like if you have a 30th of April year end, you'll be submitting the final details of your accounting period before the end of the tax year in which they are taxed. This could be problematic from a planning point of view. And just to confirm for landlords, your accounting periods is essentially 5th of April that follows the tax year, and you'll have until the 31st of January to finalise details. So again, same as it is currently under self-assessment. Just thought we'd have a look at some of the administrative aspects of making tax digital. There's been a lot of detail in this area, not all of which has been finalised. However, some good news is that HMRC have confirmed that they will not seek any late submission penalties for the first 12 months that making tax digital applies to a business or landlord. They will also not be looking to impose any accuracy-based penalties in respect of the quarterly submissions, and they will not have the power to inquire into them either. The penalty and inquiry powers will only apply once the end of year finalisation or declaration has been submitted. Penalties will also now be based on a points-based system, so there'll be no immediate penalty for a late submission after the initial 12 months, and a penalty will only be imposed once a certain number of points have been reached. HMRC have also introduced the idea of a voluntary pay-as-you-go regime to allow businesses to plan their cash flows, they say. So that means you can make payments monthly, quarterly, or as and when you like, and you can base these on your estimated tax calculations being built up through the making tax digital system, or perhaps just a fixed amount. However, I must stress that it is voluntary, or at least it is for now, and the current statutory payment dates will still apply. So we're looking at still having to pay tax by the 31st of January or 31st July. It'll also need to bear in mind that HMRC will not be paying any interest on voluntary payments. So some of you may wish to make voluntary payments into an interest-bearing bank account instead. Okay, so finally, before I hand you back to David, I thought it'd be useful to look at quickly some of the simplification measures proposed by HMRC. They've proposed a number of measures to simplify the tax affairs of unincorporated businesses and landlords. I'm going to look into these in detail, but I thought it'd be worth having a quick look. First of all, we're looking to increase the turnover threshold for cash accounting. This is available currently for smaller businesses with a turnover below the VAT registration threshold, which is currently £83,000. And so from April 2017, which is a year earlier than making tax digital, they're looking to increase this to £150,000. They're also looking to reform basis periods. Now, this is a complicated area of tax which looks at the tax year in which profits are taxable. A sole trader or partner is normally taxed on the profits of the accounting period which ends in the tax year. And then special rules apply at the commencement or cessation of a business, or when the accounting period is lengthened or shortened. We haven't got much in the way of details on this at the moment, but HMRC are looking to simplify that process and perhaps get rid of some of those rules at the beginning and end. For those who would still be outside the cash basis of business reporting or accounting, HMRC are looking to simplify some of the rules and remove the need for certain accounting adjustments such as stock and accruals and so on. This got a very mixed response from respondents to the consultation, and again, details are to be confirmed. HMRC are also looking to reform the capital and revenue divide for determining whether a certain type of expenditure is treated one way or another. and this is definitely going ahead. The broad concept will be to replace the general disallowance of capital expenditure with a more specific disallowance of expenditure relating to certain categories. I'll just quickly run through these. Property, intangible assets with a fixed life of 20 years or less, the cost of buying another business, including its goodwill, financial instruments, and any other asset which does not have a limited life and cannot be reasonably expected to depreciate in value. I think it's probably worth comparing that with the relatively generous annual investment allowance, which allows a 100% capital allowance claim on expenditure up to £200,000. So in many respects, I don't think that a lot of people see that much difference in the tax relief they can claim on their capital expenditure, but it just might make it easier to deal with. One final point to note is that the cash basis has now been extended to landlords. It previously applied on a concessionary basis for situations where gross rents were less than £15,000. It will now, however, be the default treatment where gross rental income is under £150,000, and that applies again from April 2017. If landlords wish to continue to use the accruals method to calculate their profits, then they'll have to elect to do so when submitting their tax returns or making the submissions to HMRC under Making Tax Digital. This has pros and cons, and we will be contacting all our clients with rental income in the near future. Okay, that is a brief run through of Making Tax Digital as we understand it at the moment. I'll now hand you back to David.
Thank you, Steve. That's great. I just want to look through now some of the apps and software. As Steve mentioned, the recording of information in a digital form is key to this whole process. And the expectation is that people will be, particularly the sole traders, will be using a mobile phone to capture expense receipts, for example. And the process will then be that these are intelligently read by the software system and allocated to a self-assessment category, the same categories that we currently have on the self-assessment return. Of course, following through this process removes a lot of manual data entry and hopefully improves the accuracy of the information, as well as giving people an electronic filing system. Now, we currently have systems that we use within M+A Partners with a number of our clients. And just an example, I've got some screenshots here of how this operates on a mobile phone. That first of all, the app is loaded. And secondly, armed with our receipt, I've got a fuel receipt from my local garage here. And the app then, when you take the photograph, it will then extract the data from that receipt, reading through and intelligently extracting that information. You'll see that here on the screen, it's found the supplier. It's analyzed that because it guesses this is to do with motor expenses. It's picked up the date of the transaction, the currency, the total amount, and the VAT, if that's applicable. So there are systems which we already are using that will do this. As Steve has said, these systems will be developed, and at the moment, clearly there is a cost associated with them. HMRC is very keen that some form of system is available free of charge. I'm not quite sure how practical that is in reality. Depends on the generosity of the third-party software developers. But certainly something is available and will almost certainly be in place, and we'll be providing more updates as we go through this year and in the run-up towards April 2018. And I want to look at a couple of case studies just to give a little bit of an example of what this means for people in real-life situations, although these are illustrations that come directly from HMRC. So first of all, we've got a chap here, Richard, who's a self-employed landscape gardener. Business is growing, he's crossed the VAT threshold and taken on a couple of employees. So a nice, typical growing small business. He sensibly appointed an agent to help him with his tax and thinks that this is going to solve a lot of his problems. So currently, what does tax feel like now for Richard? Well, as is common with quite a few people in this type of situation, tax management probably isn't uppermost in their everyday thoughts. And he's often does his books, sometime in arrears, and there are often some basic record-keeping errors. Familiar story to some of our clients, not all of them, of course. The step change in tax responsibilities really means that he needs some extra help. And at the moment, he's relying very much on his agent to tell him how much money he needs to put aside for tax. Doesn't really understand the tax position, and it's all a bit of a grey area. So how do we think making tax digital will help him? Or rather, how does HMRC think it might? Well, firstly, his record-keeping software, by having some process there, will actually help him keep on top of the business finances. He'll be forced to do this a little bit more regularly and keep up to date. The digital tax account will use that information from the record-keeping software. So he's only got to put the stuff in once, and the tax account will be updated. And there he'll be able to see all his tax information for all of his taxes, PAYE, VAT, and income tax in one place in real time. And luckily his agent will be able to see exactly the same information. From that information, HMRC will be able to signpost some interactive guidance and some personalized messages. And if he wishes to, he can choose to make a single payment quarterly, which will cover both VAT and self-assessment liabilities. Okay, another example, perhaps a slightly larger business, with this time a chap called Dave and his wife, who have a plumbing company, and they've recently registered for VAT and the only employees. Currently, they're keeping records on a spreadsheet, so a little bit more upmarket than Richard. The accountant is looking after corporation tax. He's got some concerns about cash flow and how he meets his tax obligations. And again, tax management probably isn't an area that he handles very easily, and he feels a little bit disconnected. So how do we think that making tax digital will help him? Well, he's going to use a third-party app to keep him up to date, and working with his accountant, that will mean that the company's records are up to date, maintaining his obligations to keep accurate company accounting records. That's going to prompt him to check any potential errors. The systems will look for things that are going in the wrong place. He'll be able to have up-to-date information about the cash flow, greater certainty about the company tax bill, and also a lot of these apps and bits of software are linking directly to the company bank account, so that that information is pulling through automatically. Some further points here, because again, all his tax information is in one place. He's got an easier place to go to and look at his whole tax situation, and he's sharing that with his accountant. Again, certain things can be signposted, and support is feeling a little bit more tailored to his particular needs. Okay, so in summary, this vision that HMRC and the government have for 2020, digital tax account with tax all in one place. We know that it's happening or planned to happen from April 2018 for some, for the sole traders and so the letting businesses, landlords, and April 2020 for corporates and the larger partnerships. The turnover threshold, although still very much to be decided and up in the air, the figure of 10,000 is being talked about at the moment, perhaps with an increase up to the VAT threshold of 83,000. We do know for certain that there will be digital record keeping and tied in with that quarterly reporting. Okay, well, that's really the end of the formal presentation. Thank you for listening. As you can see, that there's still an awful lot to be decided. It's an area that's going to evolve over the rest of this year and probably into 2018. We will keep you up to date. We hope to have further webinars which will inform us as to what is going on as we approach the deadlines. We've got an opportunity now just to look at a few more questions. There's There's one that's come through I'll just deal with before I hand over to Steve to deal with the tax-related ones. A question about whether M+A is going to be using recommended software package. Well, as I've said, we do have a package that currently we are using, and I think there will be other options available as things develop. So if you're keen to get set up with that type of system now, then please get in touch. Otherwise, wait and see as things develop. I'll just pass the microphone over to Steve to deal with some of the tax questions before coming back to me.
Okay. Someone has asked us to just go through the finalisation dates again. These will be the earliest of 10 months after the end of the accounting period, or the 31st of January. I'll just sort of go through the examples again that I read out earlier. 30th of April year end will mean you are doing the final report by the end of the following February, either 28th or 29th, whichever type of year it is. A 30th of September year end, for instance, will have a final submission date of 31st July. And the 31st December year end would be a finalisation date of 31st of October. And for accounting periods ending on the 31st of March, we're looking at the 31st of January. And for landlords, it will always be 31st of January. Okay, we've got another question here. Will wages still have to be submitted in real time monthly, or will it all be included? Well, wages are, if you're talking about your staff payroll, that will still continue under the current RTI system for PAYE. What will happen is that once it's all been finalised at the end of the tax year, the P60 and P45 details will feed through to your employees' tax accounts. The quarterly updates are for businesses and businesses and landlords only at this stage. Okay, have we got any more questions? I think someone had a question about partnerships. Yeah, okay, so I've got a question here. Just to recap, a partnership that's, say, medium-sized will still need to start this in April 2018, and the first submission will be by the 31st July 2018. Yes, basically, unless you're a very, very big partnership with a turnover of over £10 million, Making Tax Digital will apply from April 2018, but only in respect of the first accounting period starting after the 6th of April. So it really depends on your accounting period. If it's, say, for instance, the 31st of March, then you're looking at a start date of the 1st of April 2019. If you have a 5th of April year end, then yeah, you're going straight into it from the 6th of April. And as you say, 31st July will be the first quarter date, and therefore, 30th of June will be the first quarter date, and then 31st July would be the day you have to do the quarterly submission by. Someone has asked about costs. Well, that's it's a bit of a case of how long is a piece of string, because that'll be dependent on the size of business and what sort of solution you go for complying with Making Tax Digital. It's quite interesting that HMRC have estimated it will cost an average of £280 per business or landlord, whereas the Federation of Small Businesses have put it more at £2,770. So there's a big disparity there. I think HMRC have been slightly optimistic, because you've got not only the cost of software, but you've got training time, change of procedures, and all the rest of it. So I think there'll obviously be more costs to start with, but hopefully, as we all get used to it, that'll become more efficient. Okay, I've got a very important question here, actually, which is a good point. Will HMRC be contacting businesses about all this and saying when they have to do things, like they do with auto-enrollment? Or is this something businesses have to do themselves? This has actually been a very contentious point with the professions and the House of Commons Committee, and I believe the House of Lords as well, in that there has not been really much publication of this at all. At the moment, HMRC are very much still dealing with software developers and the professions via consultations and the such like to get the details sorted out. And as far as I'm aware, there's been no major mail outs or contact made with taxpayers about this. So at the moment, they really are relying on firms of accountants and other bodies to start spreading the message. I'm sure that near the time they will do. I mean, we have only just over a year to actually get this in place for some people, so they need to get the skates on. Okay, I think I'll hand you back to David.
Okay, well, thanks. There's some really good questions there, and hopefully we've learned a little bit more about that. Just to close then, you will all be sent a link to a recording of this webinar, and we will also have available a PDF of the presentation, which will, if you need to look through the slides in that way. When we send the link for the recording, we will also include a feedback. You should, at the close of this, once you end the session, there will be a very brief feedback on screen for the webinar platform. Ours will follow separately by email, and hopefully that you'll be able to give us some ideas and thoughts as to what future webinars might contain, and also be really useful about some of the other points. If you've got any further questions or want any further information from us, either on the aspects of making tax digital or indeed the apps and the software side, then please get in touch and let us know. Otherwise, thank you very much for listening and watching this webinar, and I hope to speak to you again later in the year. Thanks very much.